Hello, everybody. Welcome back to Public Live. I'm your host, Anne Berry, and absolutely delighted to welcome today Kamini Lane, President and Chief Executive Officer of Coldwell Banker. I'm sure many of you, as I have seen signs for Coldwell all over the place if you have paid any attention at all to the United States' real estate market. Coldwell Banker is a leading provider of full-service residential and commercial real estate brokerage services and is a subsidiary of Anywhere Real Estate, which is listed on the New York Stock Exchange. The ticker there is HOUS, or House. So, Kamini, let's get right to it. Let's talk about Coldwell Banker. It's everywhere. I think it's the most omnipresent brand I've seen in real estate, but I would be hard-pushed to be able to describe exactly all of the business lines that you guys have got going on. So take us through your business model a little bit.
Yeah, so Coldwell Banker is a primarily residential real estate brokerage company. It was founded in 1906 in San Francisco, actually, and we provide residential real estate brokerage services. We also have a commercial arm. We've got about 55,000 real estate professionals across the United States and hundreds of offices. And, you know, it's sort of interesting that the company was founded in 1906, actually by a guy named Coldwell and a guy named Banker, right? So it was not ever a bank, which a lot of people just assume because it has Banker in the name. But it was founded in 1906 after the San Francisco fires. And it was sort of predicated on this idea that there were a lot of people who were being taken advantage of by real estate investors and developers who were buying up cheap land after the fires and then selling them in sort of predatory practices back to really vulnerable homeowners. It was kind of founded on this idea that consumers needed an advocate in the real estate world. And I think that kind of history of heritage and integrity continues today.
Really poignant to Kamini, just anchoring a little bit, our discussion today. If you look at what's going on in Hawaii, right, and you can see the concern in Maui post the fires that there are going to be predatory buyers coming in to buy real estate from distressed sellers. That integrity that you've referred to, I think, is very much top of mind, or will be, just in light of the president's visit out to Maui, which I know is a place you've spent time in your real estate career as well. Let's talk a little bit, Kamini, about the housing market at a macro level. It has been pretty challenging on the sales side overall. Home sales were down again in July, fell more than 16% from a year ago. The rental market, though, seems strong. So if you're an aspiring homeowner, or if you want to sell your home, talk to us a little bit around what's going on with prices and what's going on with volume.
Yeah, volume really is the biggest issue right now. We've got about 60% of Americans who have a mortgage, a long-term mortgage that's under 4%, about 80% that have a long-term mortgage that's under 5%. So it's creating this sort of lock-in effect, right? When you think about someone who has somewhat of a need, but maybe not a pressing need to sell their home, or maybe even just an interest in selling their home, the reality is if they're going to sell their home today, they're looking at a 200 to 300 basis point minimum increase in their mortgage rate, which just makes it unaffordable for some people, right? And so that kind of lock-in effect is creating a lot of challenge around inventory. On the flip side, it is keeping prices afloat, right? So when you think about the danger of a crash in the housing real estate market, a really steep drop in prices is something that we would be worried about, and we don't see signs of that. But it really is this sort of lock-in effect from inventory that is importantly a lot because of the mortgage rate situation, but also because of a glut of building that goes back over a decade where, home builders really were just not creating enough residential housing supply. And that's really catching up to us.
Just to put a couple of numbers around that fix, the average long-term US mortgage rates last week hit the highest level since 2001. Freddie Mac said on Thursday the rate leapt to about 7.1%. Up even from the prior week, and 4 straight weeks of increases had preceded that. The median house costs $410,000 as of June, and this is like a numbers barrage, but they're so interesting. About 8% of homes, just a little more, cost at least $1 million. I mean, Kamini, when you look at these numbers, many Americans simply cannot afford to your point, either the headline cost of buying a home or the cost of servicing the debt that comes with it. What is it going to take to change this dynamic?
First of all, I think it's going to take a little bit of time, right? I think that's something that folks need to get a little bit used to. The change in the housing market that happened in the second half of 2020 and all of 2021, that rate of change was unprecedented, right? Mm-hmm. Both from a standpoint of the 500 basis point drop in mortgage rates, 40% increase in an 18-month period in home prices, and just consumer sentiment around wanting to move, right? There's a sort of a funny quote. If you weren't sure about your home in the beginning of 2020, you hated your home by the end of 2020, right?
Interesting. Right.
To get out. So we saw just a tremendous amount of movement in a very short amount of time.
Yeah.
That's not happening for a few years, right? So it's going to take a little bit of time for the new build, new construction to actually come online, to come on market. It's going to take a little bit of time for people to get used to the fact that if they want to get out of their 4 or 5% mortgage, they're going to be entering into something that's in the sixes. It's going to take a little bit of time for home sellers to acquiesce to the fact that the Zestimate from their home of, early 2022 is no longer accurate. It's going to take a little bit of time for buyers to recognize that their monthly budget that they calculated based on a 4% mortgage isn't accurate anymore. So I think, the sort of pace of change has led people to unrealistic expectations. And again, that lock-in effect for both buyers and sellers. And that needs to loosen up a little bit before we see the housing market really unlock.
Let's talk a bit about the pace of change, specifically with respect to the Fed and the speed with which we saw interest rates come up to the base rate that we're seeing now, which is, 5.5-ish%. It's interesting, Kamini, because if you look at what the stock market's saying, and you've got Federal Reserve representatives and central bankers meeting in Jackson Hole this week, all eyes right now on what it means for interest rates to be higher for longer. And it feels, when you look at the equity market, if you look at the bond market, that the consensus is that rates are going to be higher for longer. Goldman Sachs thinks rates don't start getting slashed really until the first half of next year. Others are a little bit more pessimistic. When you talk about waiting and patience for the housing cycle to turn, it doesn't feel very likely that we're going to see interest rates back at the levels that we saw, certainly not in 2020, not back at the levels we saw in 2008, 2009. There needs to be a whole mind shift, right, to this idea that mortgages are going to be north of maybe 5%, perhaps for the next 5 years or so. Do you think consumers are going to get there?
I actually think what's going to happen in terms of resetting expectations is going back in history a little bit, right? So, if you ask, if I stand in front of a room of my real estate agents, right, and I ask, how do you all feel from a historical perspective about rates in, the mortgage rates being 7.1% or so right now? Everybody will say, remember October 1980 when mortgage rates were 18%, right? And even as recently, and I say that in quotes, as the early 2000s, rates were much more similar to where they are now. So if you look at a longer term historical perspective, we really aren't in a moment where it is so unprecedented to have rates going up. It really is in the last 20 years. And I think it also is the fact that the sharp increase in home prices that occurred post-pandemic, coupled with the increase in mortgage rates, means that there's an affordability crisis for first-time home buyers. Existing home buyers are going to benefit from the increase in price that occurred post-pandemic. So if you get to a point where you are comfortable selling your home, comfortable getting into a slightly higher mortgage rate, you are going to have more liquidity, more equity, more ability to buy than you would have had 2 or 3 years ago.
Let's talk about those first-time buyers, Kamini. And if you look at the number of existing homes for sale, to your point, this reflects this lock-in effect. There were 1.1 million at the end of July, which was 15% less than a year ago. And you've made that point that lock-in effect is an issue. You also touched on new homes getting built or not being built fast enough. And if you read the Wall Street Journal and other financial press, they point to the fact that home builders have actually not been building with that first-time buyer in mind. That it's been much more lucrative for them to build for larger families or even to build multi-family residences that would then be rented out. Can you talk a little bit about why we're not seeing enough homes being built for the young millennial or Gen Z buyer?
You know, that actually is something that I do think is going to change. Home buyer sentiment is, nearing high points for the last 10 years or so. And there's been specific cities, there's been a big movement to transition commercial real estate into residential real estate. I live in Los Angeles, and it's a big movement here in Los Angeles. And so a lot of that is going to be turned into more affordable rental properties for first time renters, right? Maybe not necessarily first time home buyers, but for first time renters. So I think you're going to see a little bit of a loosening up of supply in that way. But again, it is going to take 2 to 3 years for those properties to get online. We are facing coming off of sort of this wave of flipping houses and huge developments being very trendy in real estate, right? This idea that you can buy a lot. I'll speak to Los Angeles. You can buy a lot for $1 million, put $1 million into building, and then sell it for $3 million, right? But I think that at the end of the day, the housing market is the ultimate reflection of supply and demand. And home builders are seeing that the built up demand is in more affordable housing for first time buyers.
Let's talk a bit more about regional differences, Kamini. You're in California. In doing my homework for this interview, I did read that you've just announced a restructuring of your own team and having certain regional focus areas. It'd be great to hear your perspective a little bit on why you did that and how that ties in perhaps to how regional trends can be different and how you need an organizational structure that perhaps is more focused around geographical differences.
Yeah, absolutely. I mean, real estate, I always say that real estate is fundamentally 3 things, right? It is cyclical, which we're seeing now.
Yeah.
It is personal in that the decision to buy or sell a home at the end of the day really is about whatever matters to that individual buyer or seller. And it is local. And so the local data, local expertise, local leadership is critically important to making sure that our brokers, our agents on the ground, have what they need to succeed, right? So if I'm sitting in Los Angeles as the CEO of Coldwell Banker Realty, at any given time, I don't necessarily know what's going on with prices in, Westchester, Connecticut versus, Tampa, Florida, right? But the leaders on the ground do know. And so making sure that there's that tight connectivity between my executive team and the strategy that we're setting at a Coldwell Banker Realty level and boots on the ground was critically important to me. And it's really interesting because you look at the coastal cities, right, where we saw sort of a flight to the center in the pandemic. Prices in California, prices in New York City are still shaky, right? San Diego County is doing a little bit better, but in LA County and San Francisco County, prices are still shaky. In New York City, prices are still shaky. But you look at the center of the country, and we've actually had a 6% year over year increase in prices. You look at Texas, Florida, over 700 people a day are moving to the Miami region.
That's an extraordinary number. Yeah.
It's crazy. I mean, we know a lot of people who moved to Florida during the pandemic, and the trend continues because people are looking for a different lifestyle. And so that level of local expertise is really, really important when we think about running such a big company with, again, 55,000 agents that are affecting the home buying and selling purchases of literally millions of people.
You touched on, Kamini, the context in which to place the mortgage trends and frankly some of these migration trends as well, which is in the historical context. And I thought the way you framed thinking about mortgage rates now versus in the 80s or the early 2000s is so helpful in giving some perspective. Coldwell itself as a company, I think not unique, but definitely, I think, differentiated and advantage in the fact that it has been around for such a long time. You know, you outlined the origin of the business at the beginning. It's been around for over 100 years. Mm-hmm. So it has withstood difficult housing markets in the past. We're in a difficult housing market now. So mm-hmm. What is it? What is the secret sauce that keeps Coldwell going through these difficult markets?
Say that last part again, and it cut out.
What is that secret sauce that keeps Coldwell Banker going through these difficult markets? And your 55,000 agents living this day to day, what are they doing, and what are the tools that you're providing through the company to make sure that the business is thriving even in a market such as this one?
You know, part of it is really just maintaining perspective, right? I think, you know, there have been a lot of startup real estate companies, some of them that have gotten quite big, that have not been through cycles, right? So the, you know, again, going back to the idea of local leadership, when you have a local leader who can say, well, let me talk to you about how we approached this in 2008. Let me talk to you about how we approached this in 2002. Let me talk to you in some cases about how we approached this in 1980, right? That perspective and that context is enormously useful. But besides sort of like local leadership and support, we are always focused on the future, right? We know how to provide the right data, the right everyday tools and support, whether it is, you know, a great CRM or whether it is a great comparative market analysis, the bread and butter to our agents. We know how to do that, right? And we've got great tools and technology to do that. And those are the things that sort of keep the drumbeat of an agent's business going. We know how to you know, remind agents to contact their sphere of influence, to always be relevant, always be top of mind. But really importantly, we're always looking to the future as well. You know, we're a 100-plus-year-old company, but we never sort of get stuck in our history. We are looking to, what does the consumer of the future need? What does the agent of the future need? How is artificial intelligence, for example, going to enable a more seamless transaction experience? What are the kind of barriers and pain points in the transaction experience right now, both for consumers and for agents, that we can use technology to overcome? How do we kind of increase the pace of the transaction, right? You know, the reality is that not a lot has changed, you know, besides being able to use DocuSign to sign, you know, a residential purchase agreement. Not a lot has really leapt forward in the home buying process. So we always have our eye on, how do we stay at the forefront of this industry and of, you know, using technology to make the process easier and kind of increase that velocity.
So I have a controversial question for you. And since you do mention data and you do mention tech, and that's about whether AI, the big buzz phrase, you can't escape it, is ultimately going to displace the agent or the broker. And you know, just to frame it a little bit, so we've seen Compass, right, which grew from a startup, it went public, but really as a tool, as an enabler. We've seen things in real estate that looks like it was shifting towards direct transactions. But for your business, and again, it's a controversial question because you've got 55,000 agents, Kamini, but is there a risk that that's going to shrink over time as AI, frankly, becomes more about putting buyers and sellers in direct contact with each other?
You know, ours is a relationship business, right? The relationship between the real estate agent and their client is the thing that is irreplaceable by any technology. And I very, very much believe that. You know, I have all of the tools and technology at my disposal. I know how to read a contract. When my husband and I purchased our home back in September of this year, in theory, we had everything at our disposal to be able to do it ourselves, right?
Yeah.
And actually, we purchased a home from a friend, so we didn't even need anybody to necessarily put us in contact, right? But we used a real estate agent because we needed that extra layer of expertise to help us walk through the home and to say, okay, you know, yes, you're dealing with a friend, but when we really dig a level deeper in the comps, these are the things that you should be looking at, right? And so I truly believe no technology will ever replace the relationship between agent and client because the agent brings so much nuanced expertise to the table. Where I think that AI is going to be incredibly powerful is replacing a lot of the sort of routine and route tasks that an agent has to do, right? Even things that are a little bit more creative, like writing a listing description, right?
Right.
That is something that AI can help make more efficient and more effective. But at the end of the day, I really don't think that any technology is ever going to replace that relationship.
Going back to your point at the beginning, Kamini, when you said 3 elements of real estate, one of which is deeply personal. So you touched on it there. Taking us out with exactly that point, bringing it back to the fact that it's a very personal thing to be buying a home. Kamini Lane, President and CEO of Coldwell Banker, thank you so much for joining us.